All right, we're ready to get started here. Hello and welcome to our webinar. We are live here at OptionsCity World Headquarters in Chicago. My name is Patrick Gardner. I'm with OptionsCity. I'm here with Nick Kennedy from Liffe, as well as not listed Dare Lashnitz from NYSE Liffe as well. She'll be joining us on this, and though not listed, I don't think anyone will have any hard time distinguishing her voice from the rest of ours. And the schedule for today is follows. Dare and Nick will share a little bit about the Liffe and some of the opportunities in their commodity derivatives products, and then we'll show some examples of those or how to execute and react to those based on OptionsCity's platforms, OptionsCity Metro for options trading and OptionsCity Freeway as an algo product. That being said, I'll go ahead and turn this over to Dare right now.
Good morning, everyone. Just want to say thank you very much to OptionsCity for hosting this. They've been wonderful at
those graphics.
bringing us in, and the partnership has been great so far. We hope you guys all find a lot of value out of it. Very quickly, I'm going to start with a brief background of why we think commodities are still important, and there's a lot of opportunities for growth as a general picture. The chart you're looking at now is world population and growth. This is an estimated exponential line of growth here by the year 2050. Right now, the global population is 7 billion. I think we welcomed our 7 billionth person earlier this year. United Nations estimates that this figure is going to reach 9.3 billion by the year 2050. That is a little bit of a staggering number. What's really important to note here is the newly emerging middle class. So what this is citizens moving from very rural areas to densely populated cities. This basically is, these people are going to need homes to live out of, buildings to work out of, and kind of a general common sense, there's going to be more people, there's going to be more mouths to feed. So that's overall why commodities are important. There's a lot of room for growth. I'm going to begin to go into our exchange in detail now. Basically, NYSE Euronext is the mothership. There are 4 sister exchanges below them. NYSE Liffe, which Nick and I work out of and which we'll be covering today, the commodity products are out of that region. NYSE Arca and Amex are the U.S. options exchanges. And NYSE Liffe US is the new U.S. exchange offering Eurodollars, Treasuries, MSCI, and metals, and that is the U.S. Futures Exchange.
And we'll point out, I guess, now that OptionsCity has connectivity so that traders can trade on any one exchange, and obviously we'll be focusing on the NYSE Liffe, particularly the commodity markets.
Great. Perfect.
Presentation.
Very quickly, there are a few access routes into NYSE Liffe. You can see the flow chart here. I won't go into it in detail. You can get a copy of this presentation, but very simply, there are a few routes, and OptionsCity is definitely involved in all of those. So you can find wherever you fit in and follow those arrows and use that to access the European exchange. This is kind of a broad picture of the commodities in general. Basically, we have 6 key products. The softs out of London, cocoa, coffee, and sugar. And out of Paris, we have agriculture contracts, milling wheat, rapeseed, and corn. The upper left-hand pie chart is a breakdown of where our daily volume comes from. 42 to 41% are our futures volume. The smaller pieces of the chart are the options. 10% being agriculture commodity options and 7% being soft commodity options. The lower left-hand bar chart is just depicts our growth in the recent years. You'll notice, and we'll get into it a little more in a little more detail in slides down the presentation. The red line is the open interest line, and the blue bars are the average daily volume. Again, we're proud of this growth, and we expect it to continue. This is a very quick snapshot of our average daily volume in number of lots from August of this year. You will see that milling wheat is our biggest contract in terms of volume. The teal bar is going to be futures, and the neon green is going to be the options volume. So milling wheat, our biggest contract, followed by cocoa, coffee, rapeseed, sugar, and then corn.
We should have made the neon green orange for this presentation.
Oh, good call. Yeah, those colors are
fitting for our corporate next time.
Refreshing colors there. Some key features of our products. These are considered global price benchmarks for the underlying physical markets. There are opportunities to hedge price exposure. They're very liquid and fast growing, allowing effective asset diversification. We've got a diverse customer base that we're very proud of. It's led by commercial hedgers. We are included in the major commodity indices, particularly the RICI. Our milling wheat is averaged in there at a 1% weight, and we're continuing our partnership with them. And again, we'll get into this further down the presentation, but there are a lot of opportunities for cross-market arbitrage. As I mentioned, there is a diverse customer base here. About 60% of our market are commercial hedgers. We think that's a pretty big number, and we're very proud of it. And what that means is that our markets are being used for what they were designed for, which is risk management for farmers, processors, millers, growers, basically the end user. The other key pieces of the chart include the institutional side, and I would say you can kind of group some of those together, but the main thing to take away from this slide is the large piece of end users, that 60%. I'm going to go now into detail into some of our contracts. There is a great transition between some of the products, so I'll try to make that as smooth as possible. Going to start with Robusta coffee. Basically, there are two types of coffee. Arabica is the contract listed on, on ICE, and that is a higher quality coffee. You'll find that in Starbucks and Caribou Coffee, etc. Our coffee, Robusta, is a lower grade coffee. It is grown in lower altitudes. It produces a little bit more of the bean, and it is a lower grade coffee. So what you'd find in instant coffee offerings and maybe on the shelves like a Folgers coffee. The crop is harvested in Vietnam. Robusta is about 35% of world production, and most of it comes from Vietnam. Again, the harvest is in October to November, so that makes November and January delivery months very active for hedging and trading, particularly calendar spreads. The futures and options markets trades mostly outrights and spread, again, mostly calendar spreads. Open interest in options is a key indicator of futures movement, so we suggest paying attention to that. And again, the arbitrage within the New York coffee contract accounts for 20 to 30% of the volume. And there is activity in the market when the New York opens, so again, something to pay attention to. The ADV in 2012 is about 12,000 lots. The bottom bullet points there are some key reports to pay attention to when looking at these contracts, again, as a fundamental picture plays a very big role. Here's a slide showing our volume in these contracts. Again, it's been a very steadfast contract. It's, again, a global benchmark. We've seen growth in it, in volumes, and we continue to see this growth, but a very steadfast contract in terms of volume. The underlying community, the international trade is very supportive, so we anticipate a lot of growth in volume. The top chart is the futures, bottom chart being the options. This is a quick snapshot of the Robusta coffee, some quick specs. It's traded in US dollars. The producers are Vietnam, Indonesia. The active spread's, again, going to be around the harvest, so not Jan. The arbitrage opportunity is with ICE. You've got your calculation there. And again, the stock reports, numbers, grading numbers, and we have a commitment of traders report that you can access on our website. There's a link down there.
Dear, when you say that coffee is at low altitude and it's in Vietnam and Indonesia, does that mean it's more volatile based on weather patterns and flooding, that sort of thing?
Absolutely, and that's a great question. Absolutely. It reacts definitely to even global political situations and definitely the weather.
So there might be trading opportunities there or higher volatility or spikes.
Absolutely, and that's why we encourage people to keep an eye out on the reports and the news wires to be abreast of any new situations that could affect these contracts.
Sure.
Great, thank you. So moving on to milling wheat, again, this is our biggest contract in terms of volume. It's a seasonal contract. Harvest is in July and August. The main producers are France, Germany, and the United Kingdom. Europe is an export region. We've got new operations coming from Eastern Europe, and the main importers are going to be your North Africa and Middle Eastern areas. The European Union does about 20% of world production. In 2011, global production was 648 million tons, and the EU produced about 130 of that. It's mainly used for milling, starch, animal feed, and in the food industry. In terms of the actual futures and options market, the curve goes out 12 delivery months, and most of it is traded in the front 5 months, 6 months, and it's a very tight market with 1 to 3 tick spread. Trades outrights, calendar spreads, and arbitrage. We'll look at some of that a bit closer. Again, paying attention to the roll and the expiration dates, as there's some volume coming through from them. ADV in 2012 is 29,000 lots. We had a record July, so we would guesstimate now that that could probably be raised to 32,000, 33,000 lots a day. So this chart, again, depicts the futures volume on top and options on the bottom in our milling wheat. You will notice that we saw significant growth in July of 2010. Going back to the fundamental picture, this was based on Russia experiencing a drought and even an export ban. Australia was drowning, and people realized that they really needed to be hedging and protecting what was growing in their backyard. And our contract, our milling wheat contract specifically, was a way to do that. So you'll see the growth in July of 2010, and something to point out here is it has maintained that growth, and we're very proud of that. It wasn't an anomaly that it grew and then dropped off. And again, similar to the Robusta contract, we expect to see similar or continued growth. And you'll notice at the very right-hand side of the blue bars, again, as I mentioned, a record volume in July. A quick snapshot of some of the specs. This is traded in euro. The producers France, Germany, USA. Harvest is in July, August to Sep. So again, your active calendar spreads are going to be anything around the NOV contract, May NOV, and NOV Jan. Arbitrage there, we'll get into that a bit closer. You've got the calculations, and again, the reports on the right-hand side. Here is a slide depicting the arbitrage between the CME contract and ours, the green line being the NYSE Liffe milling wheat in pricing, and the blue line being the CME contract. You'll notice that it's very closely correlated, so definitely some arbitrage opportunities there. What I think is more interesting is this next slide, which is the Kansas City contract and the NYSE contract. You'll notice it's even more closely correlated, and the reason behind that is the similarities in the physical contract, more specifically the protein content. This is a chart that shows the reaction of the WASDE report. I believe this was the July report. The blue bars are going to be the November 12th contract volume. The green line is going to be the November 12th price. This is a 1 hour time frame. The report is released at 7:30 in the morning here in Chicago. So this chart, you'll see steady volumes, and then within 5 minutes of time, the price dipped, volume shot up, price shot back up. We did 37% of our volume in a half hour, between 7:30 and 8 o'clock in the morning. And so again, if you can get on the right side of that trade, there's an opportunity to make some money.
It sort of jumps out at me as well, and especially the other slides with the futures price and how they move together. I'm thinking about traders using our algo platform, Freeway, and doing a pairs trade or a convergence trade, and being able to monitor the correlation based on the historical data that you see there. As well as even on a report like this, there's definitely an opportunity with the volatility spike to make money.
Absolutely, absolutely, and it's good you point that out. I know you go into it a bit further down, but there's absolutely opportunity here, and you guys having the technology to do it, it says a lot about what can be done. So here is our exchange fees and margin requirements. Again, we can go over this in more detail. What's I think more interesting is the next slide, which is going to be our new market participant program. Basically, you can get rebated rates on our contracts. They are different programs out of London and Paris. London is a 1-year program. You can trade the first 4 months at 100% exchange fee rebates. So you trade for free, basically. for the first 4 months. Second 4 months it's 75% rebate, and the last 4 months is 50% rebate. Pairs is a similar program. It's a 6-month program. It was a 9-month program. We can get into that in particular if you have more questions for me. But right now you can trade for 75% off, and the last 3 months you can trade for 50% off. It's a very easy process. It's a 1-page application with has to be signed by you as a new trader and your clearing firm, and it can be done really in 15 minutes, half hour.
So there's not that high of a cost to entry to start trading.
There is no cost to start trading on these programs. Again, the access routes, it's very simple to set up. Make sure your clearer allows you to clear the contracts, and you've got the relationships, and we're happy to facilitate some of those conversations. So please get a hold of Nick or me if you have any questions. I am going to turn it over to Patrick, or back to Patrick, who is going to demo some of the intelligent offerings here at OptionsCity.
Okay, so the first thing we're going to show you, and we're just going to show you a handful of screenshots from the system and kind of talk through what you're looking at and compound on some of the things Dare has mentioned. OptionsCity Metro is what we'll go through first, and obviously this is our complete end-to-end options trading solution. It's built as end-to-end. What I mean is that you can set a volatility skew, view the markets, and then view your theoretical values relative to the market, and then go ahead and execute based on that, whether it's through click trading, mass quoting, and electronic eye, and auto hedging as well. And then we also have comprehensive tools for market data as well as risk management is what we mean by an all-in-one solution. The screenshot we're looking at right now from OptionsCity was a snapshot we took a few mornings ago of some of the futures prices from NYSE Liffe trading electronically.
So even though you're called OptionsCity, you have futures offerings as well.
Correct. We offer on our Metro platform that we'll look at first, we offer futures execution based on click trading and based on auto hedging, mostly to complement options volatility trading. We also have OptionsCity Freeway, which is our algo platform that is multi-asset class and is purchased and used oftentimes by exclusively futures traders, this sort of thing, which we can talk about later.
Great.
So the screenshot I'm showing you right now is kind of a typical market-making options screen. And if you look at the top of it, you can see that I'm looking at the Robusta coffee contract, and I'm looking at the front few months here. And then as we go into actually viewing the market data, just to give everyone an idea, I have my strike prices down the center here as I highlight them. On the left-hand side, I'm looking at my call information. Specifically, the very center gray column is my theoretical value that I've generated based on my volatility skew in OptionsCity. And then on the left of that, I have the market bid in blue, and the bid is 10 contracts at 7 in this case for the highlighted strike. And to the right is the offer and the offer size. Moving out from there too, I have these percentage columns. Most of them are at 0% because my theoretical value is mid-market. But if we look at the 2300 strike, we can see that the bid is actually slightly greater than my value for it, and it's just going to reflect that. And throughout OptionsCity in several different windows, there's a way to not only write and create alerts like this. This is one that's kind of built in that can automatically show you where there might be an opportunity to click trade or have something preset to auto execute and kick in from there. Moving out to the left, what I'm showing you is these gray columns are my own quoting bid and quantity. Now, OptionsCity recently was approved as a vendor that has enabled quoting on the NYSE Liffe. I believe we're still the only vendor that has gone through the approval process for this.
Oh, that's
Dare's
correct.
nodding her head over
That's
here.
correct.
And so it's definitely something you can do on OptionsCity system. We do have customers doing it, and they're able to effectively make markets by setting up an edge from their theoretical and then deciding, as I highlight the offer side over here of my quotes, you set up edge from your theoretical base and then start quoting from there. So if you see on this next slide, I'm set up to, I'm looking for $2 of edge on the bid and 3 on the offer. and I can quickly as well as adjust my quantity, and then I can go up to the top of the screen and select Start Quoting for the range that I have selected, and then my quotes are going to be in the market. There's also a lot of other quoting functionality than basic edge from theoretical and what you want your size to be. A lot of the automation deals with setting predetermined delta bands for adjusting your edge automatically based on the delta of the option. You do also have the ability to use market join functionality to step up and join a better bid or an offer if it still meets some of your edge parameters, as well as automatically adjusting your size based on that. In addition to this, there's also safety quoting functionality, whereas I have predetermined levels or tick levels, as we call them in OptionsCity, that I can choose to start quoting from, or rather automatically gradually widen out my quote set to these levels as different things happen in the market. So if there's a fast underline, I can say, if the underline moves this many ticks in less than 2 seconds, I want my quotes to be here, and it brings in that level of safety, and we can do it in 4 different levels. Typically the 4th level means to pull your quotes and exit the market. We can also do this based on amount of volume that you've traded. So every time I trade X amount of contract, I want to back off X amount of ticks. All this functionality is built in OptionsCity Metro and is completely configurable and can be granular down to the even strike and side of the contract level. And what I'm also showing you here is our RFQ Viewer in OptionsCity. So as things get requested from the exchange, it's going to show up and populate in this window. If you look at the right side of the screenshot, you can see that the most recent one when I took this was at 10:34, and it was a Robusta coffee volatility spread. And right now we're showing my theoretical value for it at 28.3. Again, from this screen, I can just one-click a respond button and automatically publish my quotes from there based on my preset parameters, as well as a timeout factor where I only want to quote this for X amount of time in seconds before I pull it, because maybe typically these spreads trade immediately after they're requested. I can also click on a bid or an offer in this to bring up an order ticket, click trade, as I can anywhere in OptionsCity. If I click trade, I can bring up a standard order ticket like this and go from there. This has the advantage of, as well as you see these RFQs come in, you can actually not only respond to them with one click, but you can use our electronic eye to auto-respond to them based on what kind of strategy it is, as well as the number of legs and a few other different, and the delta of it, and some other variables, so that you get your amount of edge that you're looking for on that spread. And if someone puts this in to trade it, you may be able to step in front of someone else that thought that they were going to get this broker deal coming in electronically. Now I'm going to talk to you about OptionsCity Freeway. Freeway, as aforementioned, is our multi-asset class algo trading engine. And the way to think of it is as a wrapper that we've built alongside our existing API for Metro that has all the functionality and tools in Metro, not only for options, pricing, valuation, Greek calculation, but also the market data handlers, the order logic, the trade logic, and so on, and exposes all that API to a programmer and lets you use what we have to create your own smart algos, whether it be most likely for trading often, but also for monitoring, for risk management, and several other things. It's very open-ended what you can do with it and how granular you can get. OptionsCity Freeway comes with an Eclipse plugin, Eclipse being the de facto Java programming environment, that then you can quickly upload your Java code directly into a Freeway OnRamp. And that's what we're looking at right here, is the Freeway OnRamp. And it's just this is a simple screenshot, but it's basically the control center for all your Freeway jobs. A job in Freeway is an algo. We use them synonymously here. And so you can see I have some jobs up there, and I can see that some are running, some aren't right now. Obviously, this is a static screenshot. It also gives me some timing metrics of those jobs and how I have them organized. In Freeway, I can actually go in and configure these jobs and change them, change parameters, maybe a spread price that I'm looking for, maybe a quoting edge, or a different way I want my logic to behave without actually going into the code itself and then restart or even create a new instance of that algo job right on here. The idea being it takes even more time away from having to develop something and touch the original source code on here. Also on this screen on the bottom left, I have some basic logging information that's very important for any sort of algorithmic trading that you're going to need to capture and create all this data. And this is just, I have some smart filtering on too to display just what I care about looking at in this. And we do come with, as you see on the top right, some prefab kind of order viewing monitors, as well as we do have a whole engine as a visualization engine for graphing and charting and so on, and starting to even build your own GUIs with interactive buttons and values. The idea being that it gives you the freedom to create your own GUI based on probes and things you've written into the code that you can interact with a code in a live algo. And the last thing I'll mention as we look at this OnRamp screenshot is the bottom right is the system status showing the playback feature. This allows me to record market data and then take that market data file and play my algos back through that market data for testing purposes. You can see the meter at the bottom, it's kind of small, but I can slow down the market data or speed it up. Maybe if it's a different market scenario, maybe you have a lot of market data that you want to functionally test in a short amount of time, you can do that. And that kind of segues into the market data recorder is actually some algo job that we've built that we distribute to all of our customers. And we do have some other algorithms for commonly used things in our system, and there are other ones that we have consultants and programmers that have written in Freeway that you can actually purchase on the algo store, which is similar to like an iPhone app store, if you will. Some sort of commoditized trading algos, a generic gamma hedger, things like this that you can just purchase and have it add on quickly, so you don't need to reinvent the wheel again with common code. And I believe that is the end of our presentation. Here's our contact details here at both OptionsCity and NYSE Liffe. We hope to hear back from some of you about the presentation. Your feedback is always welcome, and we can definitely elaborate on both our respective products as well as how they work together in terms of setup and deployment.
Absolutely. Thanks again, Patrick. We were pleased to be a part of this.
All right, no problem. Here's our last slide for a legal disclaimer. Thank you, everyone, for joining. This presentation will be made available on the OptionsCity websites maybe in a day or so turnaround time, as well as on our YouTube channel. So hopefully everyone can check that out, or you'll be able to find it and distribute it to those that you may think may have missed out on it. All right?
All right.
Thanks a lot, everyone, for joining again, and have a nice day.